Hello, everyone. My name is Paulette Mbea, and I'm a research analyst at the Africa Private Equity and Venture Capital Association. Thank you for joining us on the AVCA Focus series. Today, I will be giving a brief introduction to and summary of the second edition of AVCA's Private Equity Industry Survey, which was published in April 2021. The study discusses the private equity landscape in Africa, analyzing key market drivers and impediments affecting the industry to provide a deeper understanding of how limited and general partners are evaluating their private equity assets on the continent. This year's survey examined the plans, preferences, and expectations of 34 limited partners and 43 general partners engaged in African private equity. The overall structure of the presentation is as follows. I will begin by giving an overview of the results from the limited partner survey, followed by the same for the general partners, before concluding with a discussion of the combined perceptions of both GPs and LPs on the effects of COVID-19 on Africa's private equity industry. So beginning with the limited partner survey. Regarding planned investments to African PE, this year's industry survey found that a broad cross-section of limited partners by type, size, and location remain positive and display a growing appetite for private equity investment on the continent, despite the macroeconomic instability that characterized much of 2020. This is evident in the steady annual increase in the proportion of LPs that plan to increase their private equity allocation in Africa over the next 3 years, standing at 65% this year, up from 54% in 2017. Turning to the overall attractiveness of the African market, the outlook of LP respondents in this year's survey is broadly positive. Over a 5-year time horizon, 91% of LPs view African private equity as more attractive or as attractive as PE investment in emerging and frontier markets. And this figure rises to 94% over a 10-year time horizon. 29% of LPs view Africa as less attractive than other emerging and frontier markets over the next year, up from 19% in last year's survey. However, this figure drops to 9% and 6% when it comes to a 5- and 10-year time horizon, respectively. So although the attractiveness of Africa's private equity industry has taken a minor hit in the short term due to the COVID-19 pandemic, long-term forecasts are positive and brighter than those predicted in last year's industry survey. Moving on to a more micro and country-specific analysis of Africa's attractiveness, 71% of LPs jointly selected West Africa and North Africa as attractive regions for PE investment in Africa over the next 3 years. In a recurring trend, Central Africa's attractiveness continues to rise, climbing to 24% from 15% last year. In contrast, however, Southern Africa's attractiveness has unfortunately continued to decline, reaching a 3-year low of 26%. Kenya, Egypt, Nigeria, and Morocco are viewed by the largest proportion of LPs as attractive countries for private equity investment in Africa over the next 3 years. Egypt has overtaken Nigeria, Africa's largest economy, to be the second most popular option chosen by LPs in this year's survey. In contrast to Egypt's ascent, Ethiopia has witnessed a sharp decline in this year's survey, dropping 5 places. Turning from geographic preferences to sectoral preferences, healthcare and life sciences rose 4 places in this year's survey and was identified by the most LPs as an attractive sector for private equity investment in Africa over the next 3 years. Financial services and technology, 2 of the fastest growing sectors in Africa's PE industry, were selected by the second and third largest shares of LPs, respectively. Finally, sectors associated with the rise of the African consumer, such as consumer goods, agribusiness, and education, have shown marginal decreases in popularity, but are still viewed by LPs as top sectors for private equity investment. This year's industry survey also cataloged the various investment strategies LPs prefer when investing in African private equity, as well as what developments they perceive will accelerate the industry's growth. Starting with industry catalysts, more than half of LPs believe that local capital will catalyze the PE industry in Africa, closely followed by increased international capital flows. Worth noting, a large proportion of LPs that identified international capital as an industry catalyst are international investors themselves. And this suggests that existing investors in Africa are eager to see an increase and diversification of the actors investing on the continent. In terms of their preferred investment strategies, growth capital remains a long-standing strategy of interest when investing in African PE over the next 3 years. While still a preferred strategy, direct investing has decreased in popularity this year in favor of venture capital, which was chosen by 50% of LPs. Turning to industry challenges, this year, LPs highlighted a perceived weak exit climate as a significant challenge for LPs investing in African private equity. This sentiment echoes data from AVCA's 2020 data tracker, which revealed that the number of exits in 2020 dropped to 33 from 44 in 2019. LPs also identified limited exit opportunities, the fundraising environment, and the global macroeconomic downturn as significant challenges facing GPs in Africa over the next 3 years. More positively, market saturation was not selected by any respondents as a barrier to LP investment. And this suggests that LPs still consider the African market to be viable and full of potential for private equity investment. In the next 3 years, 44% of LPs expect African private equity returns of 1.1 to 1.5, and another 44% expect returns of 1.6 to 3. Long-term predictions are more optimistic. 50% of LPs expect returns exceeding 2 in the next 5 years, and this figure rises to 69% over the next 10 years. Having reviewed how LPs are evaluating their African private equity assets, I will now give a brief overview of the results from the General Partner Survey. Mirroring trends from last year's industry survey, East Africa was identified by the largest proportion of GPs as an attractive region for private equity investment in Africa over the next 3 years, closely followed by West Africa, which was selected by 70% of GPs. Almost half of the GPs surveyed considered Southern Africa to be an attractive region for PE investment, taking a more optimistic stance compared to only 26% of LPs who shared a similar view. Turning to a more country-specific lens, Kenya leads by a fairly significant margin as an attractive country for private equity investment, followed by Nigeria. GP perceptions of Ethiopia's attractiveness have shown a partial decline. It was the 7th most popular option this year, falling from 3rd place in our GP survey last year. Turning from geographic preferences to sectoral preferences, healthcare and life sciences was selected by the largest proportion of GPs as an attractive sector for PE investment in Africa over the next 3 years, rising 4 places from last year's GP survey. Technology follows in close second, and agribusiness, which was selected as the most attractive sector in last year's GP survey, fell to 3rd place this year. GPs are marginally less focused on making new investments this year, where the portion of GPs adopting an investment-driven approach declined to 84% from the 91% recorded in last year's GP survey. Instead, at 86%, GPs have expressed a slight preference towards portfolio management as their main focus for the next 3 years. And this may be a lingering remnant of the portfolio-first approach that many fund managers put in place to insulate their investments from the negative effects of the global COVID-19 pandemic. The impact of COVID-19 is also visible in GP predictions about entry valuations in Africa. The largest proportion of GPs maintain that entry valuations have been increasing, but will decrease in the short-term future as the continent begins its economic recovery from COVID-19. At 29%, almost a third of GPs believe that entry valuations have been relatively stable in the last few years and will continue to show minimal annual variation. However, some GPs maintain that entry valuations in Africa have been increasing. 14% think that valuations have been on the rise and will continue to do so. In evaluating the opportunities and challenges present in Africa's PE industry, GPs are cognizant of a number of catalysts, but also a number of obstacles facing the industry. Starting with industry catalysts, more than half of GPs believe that increased international capital flows towards Africa, local capital, and permanent capital vehicles will catalyze the PE industry. Turning to challenges, on opposite ends of the PE investment cycle, respondents in this year's survey expressed equal concern over the fundraising environment and limited exit opportunities, viewing both as the most significant challenges GPs operating in Africa's PE industry will face in the short term. Other industry challenges that GPs expect to navigate are the global macroeconomic downturn and short-term macroeconomic risks. Shifting to focus on what GPs are looking for when evaluating future investments in Africa, more than 3/4 of GPs are seeking market growth, with market leadership being the second most cited attribute at 60%. The continued emphasis placed on market growth and leadership by GPs likely responds to the recent implementation of the African Continental Free Trade Agreement, which opens Africa's 1.2 billion person market for investment. In the next 3 years, 30% of GPs expect African private equity returns exceeding 2, a slightly higher percentage than the 22% of LPs that also shared this view. Long-term predictions are more optimistic. The number of GPs expecting returns exceeding 2 more than doubles to 65% when extended over a 5-year horizon, and this figure jumps to 92% when extended over a 10-year horizon. Africa was poised to maintain its trajectory of robust economic growth at the start of 2020, but this momentum stalled following the COVID-19 pandemic. To that end, this edition of the industry survey cataloged the views and expectations of limited and general partners on the effects of COVID-19 on Africa's PE industry. 65% of LPs and 48% of GPs believe that the attractiveness of African PE remains unchanged following the global pandemic. At 18% and 19% each, a similar proportion of limited and general partners are of the opinion that PE in Africa is actually marginally more attractive. When predicting the effects of the pandemic on their PE portfolio, GPs reported a slightly more optimistic outlook. 48% of LPs believe COVID-19 caused a marginal or significant negative impact on the performance of their PE portfolio in Africa, while only 34% of African GPs expect the same for their PE portfolio in the next 3 years. GP responses in this year's survey also indicate that COVID-19 had a significant impact on fundraising. At 96%, an overwhelming majority of GPs that began fundraising before or during COVID-19 elongated the duration of their fundraising cycle as a result of the global healthcare crisis. Just over a third of GPs also lowered their initial fund target size. This is a significant upward revision when compared to AVCA's COVID-19 GP survey, which was published at the height of the pandemic, where only 49% of GPs that were fundraising at the time expected the crisis to impact their fundraising timeline. Thank you for joining us on the AVCA Focus series today. If you have any questions or would like any further information about AVCA's 2021 industry survey or any of our other publications, please visit the AVCA website or contact the research team at research@avcaafrica.org.